What's going on, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. It is March 17th, 2022. Please go ahead and click that like button on this video. Also subscribe to my channel if you're enjoying this content. Today we're going to talk about the price action in the indices. We're going to talk about the follow through from Fed Wednesday. We're going to go through my trades for the day. Before we do that, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters. And last but certainly not least, do not YOLO your entire account to any one of my trades or anyone's trades for that matter. All right, take a look at this. Box scores. We got some nice follow through from Fed Wednesday. So check it out. We had the S&P 500 up 1.25%. NASDAQ QQQ was up 1.21%. IWM small caps are up 1.57%. Dogs of the Dow Jones up 1.2%. And we have the ARK Innovation ETF finishing up 4.81%. All of these indices closed at the very high end of their daily range. And we had a volatility contraction across the board, which is great. For so long, the VIX was stubbornly bid above a 32 handle. And now we're trading somewhere around a 25. So that is a big improvement. And take a look at the breadth. Breadth was very strong. We had 76% advancers in the small caps, and that was actually the worst of it. Everything else had even better market breadth. Finviz heat map, another day of a bright heat map. For so long it was just like blood red, 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 and now here we are. We had energy leading the pack, which is not ideal, but hey, energy got its bounce after kind of cratering about like 30%. You can see some of these mega cap tech names like Tesla was up 3.73%, Amazon 2.7, even Apple and Microsoft were participating. So yeah, overall a very nice day of follow through. Sector map, take a look at this. So we had a big give back in KWeb, these Chinese internet names that bounced about 40% yesterday. They were down 8.07% for today's session. Of course, I said earlier, XLE Energy was a big winner, up 3.44%. But keep in mind, energy was in our top momentum slot for quite a while, and now it's towards the middle of the pack. At the very top, we have healthcare, which was up 1.58%. We have transports, which are up just slightly. And then we have the solar energy stocks, which were actually down 0.57%. A lot of that downfall for solar energy stocks today can likely be attributed to this one name called Solar Edge. Let's take a look at Solar Edge. And this name, I must say, was definitely looking the best from a technical perspective. But they announced that they were going to be doing an equity offering. And I would say the price action held in pretty well for news of a share offering. Yeah, you can see this is just a little red candle, but it is still holding its tight pattern. So overall, I think this is a win for the solar stocks. I think this group is going to continue to perform pretty well. I think it's one of those groups where whenever the market gets super volatile and there's a buy the dip opportunity, I think this is going to be one of the go-to areas to go ahead and do that. All right, let's take a look here. What else do we got? Where is this? Okay, here we are. We have our sectors. Let's take a look at our style factors. And you can see on our style factor sheet, high beta equities were up another 1.82% today, and momentum stocks were up 1.78% today. So overall a good day. And then keep in mind, tomorrow is quad witching. Quad witching is when we have individual stock options, index options, individual stock futures, as well as index futures all expiring on the same day. So we have 3.3 trillion of notional expiring on this day. So I would say really just expect the unexpected. In terms of trading for me, one thing I'm being very cognizant of is I don't want to be adding any crazy options exposures on like day 2 or day 3 of a rally, just because the market has been so treacherous throughout the beginning of the year. So you'll see my one trade for today, I got long MP common shares. And take a look at MP. So MP, this name looks like it is on the verge of a breakout here. You can see it kind of stalled out at this monthly value area high. But this name, I think this is right in the middle of the fact that the United States wants to become more energy independent This is our only rare earths producer. And as of right now, we rely on China for rare earths. So I think this company is in a good spot. My trend model is still at a +3. So take a look here. Let's look at the equity indices. Look at that. So we've reestablished ourselves above the 20-day moving average, which is great, and inside of this monthly value area. And today we held in very nicely. So we actually undercut the bottom of value, and we closed not exactly on the highs, but pretty close. So not bad at all. So now we're above some of these short-term moving averages. Keep in mind, we are a little bit extended from the 5-day EMA. So I wouldn't be surprised if at some point tomorrow we do the same thing that we did today and retest this bottom of value. Now this is where things get a little complicated, because we have our blue line up here, which is the 50-day moving average right up ahead of us. That is likely going to act as some sort of resistance for this market rally. Then we have the 200-day moving average above that, and then we have the monthly points of control at 44.74. But anything is possible. We actually triggered an 80% bullish rule, and that means once you establish yourself inside of the monthly value area, there's a high chance that you cross and get to the other side of value, which would be a mood of 45.63. I must say, I'm not expecting that as my base case, but hey, the technicals are definitely starting to shape up. Let's take a look at the weekly chart and see the weekly candle that's developing. So take a look at this. We broke the downward trend line, which is great. And we've recouped 1, 2, 3 weeks of price action. 3 weeks out of a 10-week downtrend. So not too shabby here. And you can see even on this chart, we have this 50-week moving average and this 10-week EMA. And we're hitting right up against that. So I think at this point, I don't want to push it and be like, all right, we're going to get another 2% update tomorrow. I certainly don't want to do that. Nothing ever moves in a straight line. Take a look at what the VIX is doing. This is a good illustration. It's the weekly chart. So it erases some of the noise of the daily. Take a look at what the VIX is doing. Definitely entering into a new regime here of slightly lower volatility. But even still, look at this. It's not like the VIX is at like a 17 or anything like that. The VIX is still elevated. But prior to this week, we were just stuck above 30. It was very tough. All right, let's move to our daily chart. Yeah, you'll see another red daily candle here. Let's check out our NASDAQ. NASDAQ finished up 1.21%. You can see in the after hours. I'm recording this video a little bit later today, so we actually have the futures have started trading. You can see the futures as of right now are down a smidge, down 0.47%. But we also established ourselves inside of value. Our Russell 2000 as well. Same deal. Wow, we actually got to the top of value and we tagged it. Not bad. So that would be something different. If the Russell 2000 breaks out above value, I think there's a lot of investors that are stuck in like a bearish bias. And I think there's definitely some short squeezing going on here. Dow Jones is down 0.48%. as of the after hours trading, but this one also had a pretty solid session. So overall, as I look at this market, I'm like, hey, we're starting to get some nice momentum to the upside. Tomorrow is quad witching. We have 3.3 trillion expiring. Do I really have an edge on what's going to happen tomorrow? No, certainly not. And then into month end, we do have a bunch of pension and sovereign wealth fund rebalancing that is going to occur. Apparently it's between like 100 billion and 300 billion of equities have to be bought. So that could be another reason why we're getting this almost like a counter trend rally in the midst of a pretty bearish year so far. So I don't want to take anything for granted. I don't want to like all of a sudden just start throwing caution to the wind and swinging for the fences. Because take a look at where we are right now. This is our chart of SPY. This blue line is our upper Bollinger Band, and we are starting to get close to that upper Bollinger Band. So I think if you want to add some sort of hedge onto your portfolio, better time is at the top, like the upper Bollinger Band, than trying to do so when you're oversold and you're at the bottom Bollinger Band. Last thing here before we break, take a look at our dark index. Since I'm recording this a little bit later, we can actually take a look. I'm pulling this up over here. Check it out. So our dark index came in at 50.6 again. So I was certainly getting laughed at quite a bit on FinTwit when I was citing that this dark index was elevated as we were going through January, as we were going through February, and the price action was really negative. And so far, this dark index, this thing is undefeated. You know, there's definitely some accumulation going on under the surface. Our dealer gamma is now close to 10 billion, but that's likely going to change due to quad witching tomorrow. So yeah, definitely stay safe during quad witching tomorrow. Don't be surprised if we get like a trendless market or some back and forth price action. And I think heading into tomorrow, less is more. Hope you all have an awesome night, everyone. I will see you all tomorrow.